In today's video, I am going to be breaking down a very interesting ETF. The ticker symbol is BTCY.TO, and basically it's an ETF that holds Bitcoin but pays you a ridiculously high dividend of 14.5%. How does it do it? Let's check it out. Okay, so first off, it is a purpose investment. It's a purpose Bitcoin yield ETF. First, let's actually look at the charts and see what it's like. So we can really only look at the 1 month chart because it's only been around since the beginning of December. It's been literally less than a month that it's been around. And it's getting a couple of thousand shares being traded every single day, but it is kind of new. As we can see, it's basically followed Bitcoin's path pretty well steadily. Let me show you what I mean. Over the past month, this is Bitcoin's chart. It came down just like it did with BTCY. However, BTCY had a little bit bigger of a jump here. That's kind of interesting to me. However, what they are basically trying to mimic is the price of Bitcoin. That's the idea behind this ETF. However, how they pay the dividend is actually quite interesting. They pay the dividend by running covered calls. And basically what covered calls are is, let's say you have this stock, we'll call it a Bitcoin, and let's say you have 100 of them. So we'll say Bitcoin times 100. And let's say we want to sell these as a call option, and basically that would be called a covered call because we already own the Bitcoin. However, what a call option does is it promises somebody else, whoever buys the option, to purchase the Bitcoin at today's price. Let's say today's price is $60,000, just as an example. And they promise to buy those 100 Bitcoins at $60,000 in, let's say, 6 months. However, in 6 months, Bitcoin is, let's say, worth $70,000. Well, you would think that that was a fantastic deal. However, this contract may say, well, we'll only sell you those Bitcoin if the price of Bitcoin gets to $100,000. So you're basically betting on Bitcoin hitting $100,000 per coin in 6 months so that you can purchase it at $60,000. And then, on top of it all, you have to pay me what's called a premium of, let's say, probably at that price, $10,000. So it seems like a heck of a good deal, because you're only paying $10,000 to buy 100 of them at a lower price if they reach 100,000. However, if they don't reach that 100,000, they reached 70,000, I keep my Bitcoin and I keep your $10,000. That's essentially how covered call options work, and that's why covered call ETFs in general, whether it's stock or gold or in this case Bitcoin, can make you a lot of yield. The reason why Bitcoin ETFs that are selling covered calls on their Bitcoin is because Bitcoin is so volatile that the option premiums are probably through the freaking roof. And because of that, they can pay you a massive, massive, massive yield of 14.5%. Now, it does depend on which version of this ETF that you do purchase, considering of the yield, because depending on which one, you're going to get different yields. So the one I actually purchased is this one right there. That one. For one reason and one reason only. It's obviously not the highest yield. However, this one is hedged on the cost of the Canadian dollar. This one is not hedged and it has a little bit lower of a yield. And then this one is on the Canadian market but in US funds. So between these three, I personally went with this one and I purchased 240 shares. I actually purchased 240 shares at $8.25 because at 14.51%, that is an absolute killer deal. And think about it this way. For every $1,000, which is ridiculous, for every $1,000 that you invest, you will get 145 in this case, $145 a year. So if you had, for example, $100,000, 100, that's times 100. This would also be times 100 as well, which equals $14,500. That is insane. That is literally huge. However, considering it is a covered call ETF, if you are holding it in a margin or a cash account, there will be taxes on that. It's called capital gains tax. It's taxed a little bit differently than dividends and things like that. Now, also keep in mind, if you were to put this inside of a TFSA and you maxed out your TFSA at, let's say, $75,000, just to make math easy. I know it's $76,000. It's going up in this year. However, let's say you had $76,000, and I would never put all my money into one basket, but times 0.145, that would bring you $11,000 a year tax-free, which basically is ridiculously amazing. Just think of the possibilities of $11,000 that you'll never have to pay taxes on. That is amazing. There's a few really nice things about their website as well. They do put the historical price of Bitcoin on their website, and overall it's a fantastic tool to use because they do give you frequently asked questions. If you had any questions about the ETF, it's always good to do your own research and not trust a random person or comment in the comment section. And if you were curious about some of the frequently asked questions, what is the frequency of the distribution of the 14.5%? Well, guess what? It's 14.5% per year. However, it is divvied up every single month. This is actually a very interesting ETF because, of course, just the level of yield that you're getting. And obviously, if you had any questions about this ETF that are popping up on the screen, definitely go check out their website. This is not a sponsored video whatsoever, but I had a comment in the comment section and I seen that there was some really interesting things about this ETF, and I really wanted to share it with you and let you know that I actually purchased 240 shares of it. So if you're looking to get into the Bitcoin space and you haven't done so already, this could be a viable option for you. If you're a dividend investor like myself, it's just crazy that you can get 14.5% plus the potential upside of whatever Bitcoin goes to. And apparently within 5 years, they're thinking or at least these crazy people are saying it's going to go to $1 million in 5 years. And if that's the case, then we can get massive dividends at the same time of massive growth. If this goes up even 10 times higher, that would be the $600-something thousand for a Bitcoin, which is seriously not far-fetched for how crazy this thing's already gone. Then you're literally putting, let's say, the $2,000 turns into $20,000, and in that 5-year span, you're basically looking at massive yield. So, like, if you're looking at something that's 14.5% as an example, and you go 100 divided by 14.5, that just basically means that within 7 years, if this stock goes level and it continues to pay 14.5% on your original investment, it would take just under 7 years to get your money back, and then you still have your money in the account. And if it's gone up 10 times or even 20 times what it's at right now, then you're looking at an absolute killer of an ETF. And if it stays at 14% and it continues to rise, let's say it doubles in value and now it's still paying 14.5%, you're technically now getting paid a heck of a lot more than you were before. And I really like this ETF, even though it's still very new. I dislike investing in brand new ETFs, but this is actually quite interesting. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.